Just to introduce while you're waiting, myself, Donal Flanagan, I'm Teagasc Nursery Stock Advisor, and Donal Gernon is Mushroom Advisor. And we're joined by Ray Langton and Declan McEvoy.
Good afternoon, everyone. Welcome to the Sustainable Energy and Investments in Horticulture Sector webinar. Like Donal mentioned, my name is Donal Gernon and I'm the Teagasc Mushroom Advisor. So the Irish horticulture industry, it's important it's important in terms of economic value in Ireland. It encompasses vegetables, fruits, ornamentals, flower bulbs, trees, mushrooms, and protected crops. It's clear to see the sector is very diverse and the energy demands vary between the subsectors, making it important that the right financial support tools are in place. It's important that growers are aware of the support measures that are in place to make their energy more sustainable. So shortly, I'm going to pass you over to Ray Langton from SEAI, who will discuss the support scheme for renewable heat and how it can benefit horticulture businesses. Ray is the SSRH Program Manager with SEAI. He will give an overview of the scheme, how to apply, and the application process. So following Ray's presentation, we will have a short Q&A. Then I'm going to pass you over to Donal Flanagan, the Nursery Stock Advisor. Donal will introduce you to Declan McAvoy from IFAC, who will discuss the financial impacts of a range of measures, including accelerated capital allowance for capital cost write-down. So as you can see at the bottom of your screen, you will find a Q&A box, and there you can ask your questions as they arise throughout the webinar. I'll put these questions to Ray and Declan at the end of their presentations. So if you're having any technical difficulties throughout the presentation, don't worry, the event is being recorded, and following after the event, we will put it up on the Teagasc Horticulture Development Department YouTube channel after the event, and we'll share it on our newsletters also. So without further ado, I'll hand you over to Ray to begin his presentation.
Great, thanks, Donal, and thanks for the invitation to be here today. So I'm delighted to be here to talk about just one of the supports for the sector. Specifically, I'm just putting up my slides now, so let me know if you can see my slides.
Yeah, they're coming up.
Great, yeah, so I'm here to talk today specifically about the support scheme for renewable heat. So it's about support for people who want to move away from fossil fuels, basically. So what is the support scheme for renewable heat? It's a financial incentive, a government-supported financial incentive to replace fossil fuel heating systems with either heat pumps or biomass or biogas heating systems. So basically replacing them with renewable heat. So anyone who's on the call today who's using fossil fuels, stick with us and I'll explain to you how we could support you to get away from fossil fuels, basically. The scheme itself is targeting a very specific quantum. It's not going to be there forever, but it is targeting a substantial quantum of heat in Ireland, 1,300 what's called gigawatt hours, and that's equivalent to about 120,000 homes, or I suppose for the audience that are here today, that would be about 12,000 mushroom farms. Roughly speaking, obviously depends on the size. So it's a big scheme, and it's an opportunity to significantly reduce carbon footprint. So particularly for growers who are interested in that area of presenting a reduced carbon footprint for your market conditions, this is a real opportunity to make a huge impact on your carbon footprint. And for agriculture in general, switching to biomass in particular has lots of benefits all the way along the supply chain, and as well as delivering direct savings, which I'll explain to you now as we go on. So it's about saving money. It's about switching to renewable, and it's about reducing carbon footprint. And the scheme is now up and running, and it's open to applicants. So how does it work? So it's a hybrid scheme. So in other words, the two elements to it. One is where we offer a grant for heat pumps. So if people are investing in heat pumps, and they're a very specific piece of technology, they can be either air source heat pumps or ground source heat pumps or water source heat pumps, and there's a grant for those, a grant of 30% of the investment cost in that. And the one that we'll talk about most today is a different form of support, and it's what we call operational aid. You don't get a grant up front, you get support through a tariff that's paid for 15 years. So it's a bit like the reverse of your ESB bill, in the sense that you use heat, you take meter readings, you send them in to us, and we pay out money continuously every quarter for 15 years. And that's for biomass heating systems. So wood pellet boilers, wood chip boilers, or boilers run on anaerobic digestion gases, which are quite specific. I won't go into those too much today, but if somebody is interested, do by all means come back to me. So who can apply and what can you heat? In other words, who is this open to? It's for everyone in the commercial sector by and large. So anyone in any commercial, industrial, agricultural, a public sector, even district heating. The two groups that are not included on the high end is what we call people who are in the emissions trading scheme. I don't think there's anyone on the call today that would be in the emissions trading scheme. They tend to be really big energy users, things like cement manufacturing and major energy users. If you're in the ETS, you'd know all about it. And at the other scale, not domestic, so not Ray Langton's private house or anybody else's private house. So it's the commercial sector in between, which I think in the round would be more or less everybody's on the call today. So the other question is, what kind of heat? What kind of heat can you use, and what's eligible here? So basically, most types of heat. So what we would call space heating. So that's heating offices or heating workplaces for wherever people are working. Water heating, anything to do with process heating. If you use hot water or heat in your process, or bottle washing or anything like that, or for sterilizing, any of those kind of heats are eligible. There are some exclusions, and when you think about them, they're quite logical. So the scheme is about efficiency as well. So we wouldn't allow heating of open spaces. So when you think of the things that are popping up now about outside restaurants and that type of thing, it's just so inefficient. Heating the air that just goes into the sky. We don't allow that. Wood fuel drying, and we don't allow that, because if we did, you'd be getting support twice in the chain. You'd be drying the fuel and then burn the fuel again, and it's just not it's not viable to do it that way, and not heat that's used for electricity. So if you're using a heat source to generate electricity, so they're very specific. So most heat sources that people would be familiar with are included. Obviously, it has to be produced from what we call an eligible installation. So that means a boiler that is to the right standards and quality. And it's the kind of boiler you'd want to buy anyway. They're not onerous standards, but they are good energy efficiency standards, eco-design standards. And the heat obviously has to be metered. You can't just make it up. As say, using the electricity analogy, it's very like an electricity meter. You need a heat meter, and we'll tell you all about where to put heat meters and so on. The other one, just to keep in mind that is not included, is any heat that's produced just because of the scheme. So again, if you think of the logic behind that, the scheme is to convert away from fossil fuels. It's not to generate new heat uses. So if somebody approaches us and says, I'd like to do something, some kind of strange drying or whatever, but it's not viable. But if I had the SSRH, I would start doing it. That we would regard that as non-economic heat use, and really what that would be, if we did support something like that, it would just be generating more heat in Ireland, and that's not what we're about. We're about conversion. So just to talk about how the tariff scheme works, what would it mean if you did go down that route? As I said, heat has to be from renewable heating systems. It can be either existing installations that convert. So if you're currently a mushroom grower or a soft fruit grower and you're using fossil fuel at the moment and you're interested in conversion, that would be great. Or it could be even new installations. We use the phrase that has a counterfactual. So in other words, if you're considering a new installation or an expanded installation, or putting up another 2 or 3 mushroom growing tunnels, we regard those as new installation. They could be eligible, as long as there is in essence an alternative. So in other words, that you're considering fossil fuel as the basic option, but with our support, you would convert, you would install them with biomass. So new installations can be. The only catch on some of those would be some buildings, some building regulations specify a particular type of heating system. It's rare enough, but if you're regulatory obliged, in other words, you don't have an option, you're not going to get state support to do something that you have to do anyway. That's what that means. So the tariff table, if you look at it, and I'll explain it on the next slide a bit better, but I'll just refer to it on this slide first. The fourth column there, the one that's headed biomass heating systems, tariff cents per kilowatt hour, the column that has 5.66 and 3.02 and 0.5 and so on. And if you compare that to the two columns to the left of that, so the two columns to the left of that are heat range, energy ranges, and megawatt hours. If you're not familiar with it, it's a measure of heat or a measure of energy. So the first 300 heat units get paid at a rate of 5.66. The next 300, from 300 up to 1,000. So in other words, the next 700 get paid at the rate of 3.02, and so on up the table. And again, just to give a sense of scale, it's very broad brush, and every application is different. But we have a number of mushroom growers, for example, on the scheme. And they would typically, they're all different sizes, as you know, but they would typically be around the top of tier 2. They're around 1,000, maybe 1,200, that kind of range. So and I'll show you on the next slide now how those tiers pay out and how they work. So first to say is that they're cumulative. So again, very like the income tax, you bank one and then you go on to the other. If you're in tier 2, it doesn't mean that you're excluded from tier 1. You get tier 1 and then you get tier 2. And just from the pictures on the side, just to show that the table works the same for everybody, whether you're growing mushrooms or whether you're running a hotel or a commercial business of some other type. There's not unique rates for different types of business. It's the same for everybody. And I've laid out some figures here just to illustrate how it all hangs together. And you need to, I suppose, in your mind, refer back to the previous slide and to this slide, and I'll show you how it would come about. So if we had a project here with an output of 1,100 megawatt hours, and I'd say broadly that would be a mushroom farm with 12 or 14 growing tunnels. You know, that's just to give you a sense of scale. Obviously, it depends on the size of the tunnels and so on. But you know, you're talking about a fairly substantial mushroom farm to have that kind of size. So SSRH support for that amount of heat amounts to 38,620 euros in any 1 year, and this is for 15 years. So and referring back to the table, where did that figure come from? So as I said to you earlier, it's the first 300 at 56.5, that brings you up to 16,980. They get the next 700 at 30.2, which is another 21,000, and they flipped 100 into the next tier, which brings them in another 500. And over the year, and they'll get this paid on a quarterly basis. So the first quarter and second quarter would probably would be higher, I suppose, than the third and fourth quarter because they're into the higher tiers. But over the whole year, they would get 38,620 for that particular example. And typically, again, this depends so much on what is there already or what the old heating system. So I've used an example here of somebody who's using natural gas. Natural gas is the cheapest of the fossil fuels. If you're using kerosene or you're using LPG, it would be even more expensive. So typically, and these figures, as we all know, change from day to day. So they're purely illustrative. So for that amount of heat, to use natural gas would typically cost about 55,000 euros for the year. I've showed wood pellets here as being a little bit more expensive than natural gas. Actually, at the moment, they're not, but nonetheless, just for the purpose of this example, to change to wood pellets is actually costing you a little bit more in this example. And I've put in an additional operating cost. Again, I'm being very conservative here because I don't want to build up expectations too high. There can be some extra costs associated with documentation on the scheme, with maintaining records and all that type of thing, and just with handling biomass over, say, a natural gas system, for example. You just turn it on once and you turn your back on it, basically. You don't have to go near it again. So if you put all those costs in, you get 38,600 from SSRH. You lose 10,000 on conversion from one fuel to another, so that brings it down to 28,000. And you an extra operating cost of 5, it brings you down to total saving per year in that particular example of 23,600. So those are the kind of figures to look at for yourself. And I'll talk about how to do that later, because every case will be different. So if you're interested in the scheme, and in essence, I would say, look, if you're burning fossil fuel at the moment, you would be quite mad really not to at least go through what I'd call the scoping stage, which is a back of the envelope calculation to look at what I just showed there previously. So on the previous slide, get out your fossil fuel bill, get out your heat bills for the last year. See how much, even at a simplistic level, if you only know how many liters of kerosene you're using, you can convert those, and there's easy tables, and we can help you, or I know Donal can help you as well, to convert your quantity. So if you know how many liters of kerosene or LPG that you're using in a year, you can convert it very easily into megawatt hours. That's what I call the scoping. You can talk to some of the suppliers to get an idea how much it would be to convert over, just to get a rough idea, and see, does it work for you? I'd be very surprised if it doesn't, to be quite honest. It may not work for you in some particular examples if you've just put in a brand new fossil fuel boiler in the last 6 months or whatever. You may not want to go there again, but in the round, the scoping exercise will give you an idea of whether there's something in it for you. If there is, you go to the next stage, which is preparing for an application. It's an online application process, so everything works automatically online. But I would say it's demanding. It's not the scoping exercise you can do while you're sitting watching the match on the telly at the weekend. The application process is going to take a lot of work, and it hangs out of a design report. And really, you should engage, unless you're competent in this area, and you may well be, a design engineer to really work out for you what the heating system involves, because otherwise there can be quite a difference between a rough back of the envelope scoping and an actual detailed. And we will bring you through with the application process very specifics around your heat use, around the design of your system, and in essence making sure that it's fit for purpose and that it is up to the standards that are going to last the 15 years and are going to deliver for all of us the heat output, and for you in particular the income that you expect to get out of it. There'll be a bit of back and forward with SEAI and the application process, led by your design engineer. So we'll ask you who's the technical lead on this project, and we'll engage with them on the technical nuances of it. Often suppliers offer that service. So suppliers of biomass boilers are very familiar with our processes and can offer that service as a design engineer, and they can do all the work on your behalf. The key thing and the golden ticket, I suppose, is to get a letter of offer from SEAI. So after the application has been approved, that's what you get, and it's a very legalistic and it's a contract in essence. It's related entirely to the design that you have submitted. So you've submitted a lot of detail about what your business is, what you're going to use the heat for, what the design of the heating system is, how much heat you expect to use, how you've validated to us that that's an efficient use of heat, and that letter of offer links specifically to that use. So it's not a blank check, it's for your mushroom plant or your soft fruit growing plant or your hotel or whatever it is. And it has what we call a heat cap, for example. So this is about protecting the exchequer funds and to avoid what happened in other jurisdictions, that we will agree with you what your typical use is and what your maximum use is and maximum amount that we would pay for. Because in essence, what you're doing in each contract, or what we're doing, which is that we're putting our arms around a small section of the budget. So that section, that piece of the budget is put aside for you, as it were, and it's not endless. So it's up to a particular level, but it will be to the level that's suitable for your plant. You then, after you've got the letter of offer, you go and you install it, and it's really important that you don't jump ahead here. We have had occasional cases where people don't understand this and they jump ahead. The reason why it's so important, and hopefully if you understand the reason, it'll avoid the embarrassment of moving ahead, is that state intervention is regarded as an incentive effect. So in essence, we are incentivizing you to make a decision that you wouldn't do otherwise. If you have run away and do it anyway, put the boiler in while you get distracted or bored waiting for the letter of offer, in essence, what you have legalistically proven is that you don't need an incentive, and you've gone ahead and done something that you were going to do anyway, and it's an absolute showstopper. So wait for your letter of offer. At that stage, you can order your equipment. At that stage, now, it doesn't stop you talking to and making the designs. Obviously, you have to do the designs for the application. You can prepare and so on, but you can't actually buy the equipment. You go away and install it, whatever that takes, 2 months, 3 months, 6 months, 9 months, and you come back to us at completion. You send us a detailed completion report, which has a lot of technical information. It's actually the mirror image of the design report. So it is certificates about safe installation and so on and so forth, and completion of the project, and confirming that it's all done to building regulations and so on. SEAI inspectors will go onto the site to inspect the plant, and again, everything goes back to the design report. What we agreed and what you agreed you were going to put in, has it been put in? Has it been put into the right standards? Have all the electrical fittings and so on been done as they should be according to the building regulation? And if they all are, that's where we all start. The clock starts. We agree what we call a 0 meter reading at the inspection stage, and the payments kick in then on a quarterly basis. So you have your 0 meter reading, let's say today, 3 months time, you send us your first official reading, and within 1 month of that, we will pay your first quarter, and it goes on and on then for 15 years. There are ongoing obligations. Again, in essence, the ongoing obligations, I'll talk about them on the next slide, are that you maintain all those standards that are there. So just to go back to the design, because these are some of the things that have caught people out, and I use the phrase holistic design, and the design engineer is really critical to this, having a competent design engineer, because it's not just about some people made the mistake of thinking it's just about the boiler. Design is just, what boiler am I getting? Am I buying a Grant Vortex boiler, or what am I buying? It's much more than that. It's about the complete heating system. So all of it. Are you using old components? And that's fine. You have to buy a new boiler, but you could be using the pipe work, for example, that's there. That's what we call the heat distribution, or the heat emitters, or in essence the radiators. That's fine, but we want to see all of that on your drawings. We want to know what is this heating system, the new heating system. And what's driving us there is just to make sure that it delivers the heat needs. Now, we're not designing it for you, but we do an overview check that it makes sense, that it's not twice the size it needs to be, because if it is, you won't get the right efficiencies, or it's not half the size it needs to be because you won't get the heat you need. So the size and scale of the heating system has to be compatible to the size and scale of your business. We do look for historical evidence of fossil fuel use, because it is a conversion scheme. So we look in simple terms, we look for a year's receipts. So receipts of your purchase of your LPG or your kerosene or whatever. And that's critical to it. It's for the primary purpose of confirming that you are converting, but it's also that goes into the calculations. And in essence, we're looking at, exactly as I said, at the scoping exercise, but we're looking in more detail at, well, how much fuel are you using in your growing operation? And if that's what we do with that, then is we check it against benchmarks for the industry, and Teagasc have been very helpful to us in this regard. We're not looking for the best in the world, but we are looking to make sure that it's sensible heat. Again, to use the phrase of other jurisdictions, We have all seen scandals before of other schemes that were heating tin sheds and empty sheds and so on. So if somebody is using an amount of heat for a growing operation, we want to know that that's a sensible amount of heat to use, and it's up to a reasonable efficiency standard. So that's where the receipts come in as well, and that in essence is what we match then on the amount of heat that we will support for you. The other aspects of the holistic design, planning permission. So, and a lot of these things, planning permission, building regulations, safety, environmental licensing, these are not SSRH requirements per se, but what you've got is you've got a state organization like the SEAI supporting an intervention here. So it has to comply with the laws of the land. So we do look to make sure that you do have planning permission, both for the business itself. So if you've got 12 mushroom growing sheds, that you have planning permission for those, and for the new heating system. So in some cases, there's no implications from a planning point of view. In some cases, depending on the scale, you might be building a new boiler house or whatever, you might need planning permission for that. The building regulations, again, there's always a minimal amount of building regulations, even if you change your heating system in your own house, there are building regulations that apply, but they can be quite minimal, or they could be quite significant depending on the size of the project. If there's a whole building being built, that it has to comply with the building regulations. It has to comply with any safety systems. So again, most of those are covered in the building regulations. Also supplier guidelines and safety systems around fuel storage, around carbon monoxide and carbon dioxide and so on. And also environmental licensing. I don't think this would apply to too many people on the call, but the key part is that if you operate under an environmental license, and some sectors of agriculture do, so poultry farmer, for example, and pig farming are all covered by an environmental license. So you have to look at your license. If you have one, make sure that the proposal is compatible with it, in some cases the license was specific to a particular fuel use, and therefore they have to upgrade their license to report that they're changing fuel and so on. So let's remember the holistic design, and these are some of the things that caught people out. They just thought, I'll put in a good boiler, it is a good boiler, just switch it over. They never thought about the planning permission, they never thought about the environmental licensing and so on. And you get to the end then, and there's a serious intake of breath at the inspection stage when we find that something isn't compliant with building regulations or whatever. So just looking then at sustainability and ongoing obligations, assuming you get through all of that, and there's no reason why you wouldn't get through all of that, they all make sense when you think about it. Sustainability kicks in, so the biomass fuel has to be sustainable, and basically all wood pellets and wood chips are, or if you're using biogas, it's quite technical. There's quite specifics. I won't go into it here today. We don't have enough time, but do come back to us if you want to use biogas. The fuel quality criteria generally is what's called the Wood Fuel Quality Association of Ireland. Their stamp is we regard as acceptable. And there are air quality standards, and these are all related. You see these in the press, even reported from time to time. If you don't use the right fuel, if you use wet fuel that you're not supposed to use, you have air quality problems. So we want to make sure that doesn't happen and doesn't give a bad name to your operation or to the scheme. And the ongoing obligations then, which in essence could be summarized as saying that you have to stick with the rules, all the eligibility criteria. So you can't, as soon as the inspector goes, you can't start burning coal in your biomass boiler. You have to stick with it with the quality fuel. You have to stick with the measurement and reporting, the sustainability criteria that I talked about. You keep your receipts, because in a couple of years' time, another inspector may come along and look for evidence that you have been using the right quality fuel. You have to operate and maintain the plant. So if the manufacturer of the boiler says it needs to be overhauled or maintained every 2 years, we'll demand that you do that. We don't set the rules that the boiler manufacturer does. A bit like your car. If your car says it has to be serviced every 50,000 kilometers, then you have to do it the equivalent here. That's it in essence. So SSRH, it's an opportunity for any of you that are in business that are using fossil fuels. It's a real financial gain, and agriculture certainly can benefit all the way along the line. And come and talk to us. If there's anything that doesn't make sense, we're not in the business of trying to catch you out. If you're trying to figure out whether you're eligible or not, ask us and we'll tell you. So thanks for that, Donal. I think I'll pass back to yourself at this stage.
Yeah, thanks a million for that, Ray. Look, we ran a wee bit over time there, but
sorry about that.
Just a couple of things just to mention, worth mentioning. I know from my client's point of view, the mushroom growers, there has been a fair bit of interest in this scheme. Some growers are still on the fence whether to apply or not. And I just know some growers who have gone through the whole application process and have actually now got their first payment. And the application process, it's long, it's tedious. There's a lot of detail that's required there. But the way I look at it in the grower's point of view, it's worth it in the end when they got their first payment. It's not only benefits them financially, but also enhances their green credentials and their carbon footprint. So it's very attractive from that point of view.
Yeah, absolutely, Donal. And just to add to that, I think it's fair to say that the early adopters, as it were, did have, it was tougher. We were all figuring out the documentation required and so on. So the installers and ourselves are more familiar now, and hopefully people coming into it now. It still have to do the same things, but it's we can communicate it better and we can make it clearer.
Yeah, absolutely. Just a question coming in here. How long do you think the scheme is going to be open for, Ray?
Yeah, the scheme is officially covered by what they call state aid rules, and the state aid permissions run to December 2025. So that is another four and a quarter years from now. That doesn't mean that it'll definitely stay open. If the government pull money back or whatever, that could happen. But it's the likely time period.
Yeah. Okay. Perfect. And just before I hand over to Donal, I would encourage growers who's on the fence to maybe contact either myself or your local Teagasc advisor, or else discuss it with Ray himself. Your option, how much fuel you're using, and we can work it out ourselves on how much that equates to in kilowatt hours, and then convert it to see what your possible payment would be through the scheme. So I'd encourage any growers coming onto the calls to go down that route if they're looking to scope it out, and we can give you a fairly good estimation, like I've done with other mushroom growers. So I'll pass you over to Donal, and if there's any more questions for Ray, we'll hand it back to you later on. So Donal, if you want to introduce Declan.
That's great, Donal. Thanks very much, and thanks very much, Ray. I'm going to hand over to Declan McEvoy next. And Declan McEvoy is head of taxation in IFAC. IFAC will be well known across Ireland for the services they provide in financial planning, accountancy, bookkeeping for agricultural, food services sector, and a few others. So Declan has quite a good bit of experience now on the different sustainable energy options that are available and their implications for tax and tax opportunities. So Declan, I'm going to pass on to you, and I'll let you share your screen and we'll get going. And again, you can submit questions for Declan through the Q&A button as we're going along, and then we'll deal with that at the end, okay? So thanks again, Declan, for joining us.
Okay. Thanks, Donal. What I'm going to look at today, is some of the tax aspects of energy efficiency in agriculture and horticulture. If we just look at setting the scene, first of all, from a tax point of view, an individual low rate taxpayer, the tax rate is 28.5%, which is 20% tax, 4% PRSI, and an average 4.5% universal social charge. The high rate goes from 52% for any self-employed person with income up to €100,000, and a self-employed person with income over €100,000, anything over 100,000 is liable to 55% rate of tax. If you're trading through a limited company, it's 12.5%. And a lot of people listening at the moment and listening over the last month and over the next couple of months will hear about this minimum rate of corporation tax. The OECD is recommending a minimum rate of 15%, and Ireland Inc. hasn't signed up yet, and it hasn't signed up to the minimum because of the fact that they're talking about a minimum of 15%, but they're not nailing it down to what that minimum will be. I was just listening to the minister yesterday, and he was making the point that if it is 15%, they will sign up. But if it's 18 or 19%, they mightn't. We must also have a look at VAT. The two main rates of VAT are, outside zero, it's 13.5 or 23%. So anything that we'll be looking at, it's the net expenditure will be the after-tax effect of the expenditure. So if we look at the tax system for once is in line with the various initiatives. However, improvements and certainty will be required. Ray was talking about state aid rules are there in place until 2025. We don't get as much certainty in the tax system. It was upgraded last year, and we're looking at 2023 at the moment on the allowances and schemes from a tax point of view. And the tax system will need to adapt as technology improves. Up to now, the tax system has been slightly ahead of the technology, but as technology is moving quicker, the tax system needs to be able to evolve as quick. So first we look at VAT. And just setting a scene from a VAT perspective, the majority of ordinary farmers are not VAT registered. VAT is very sector specific in agriculture, horticulture and that. So first of all, if we look at a flat rate farmer, someone who's not registered for VAT, but they're getting a flat rate on their sales. They're able to get VAT back on farm buildings and construction of, erection, installation of qualifying equipment for the purpose of microgeneration of electricity for use solely or mainly for the purposes of a farm business or a business. So they're able to get VAT back in the ordinary course of what we'll be talking about in a couple of moments. Most people in the horticulture sector are VAT registered, and VAT can be reclaimed on investment on the normal VAT-3 return. So it's an expense. So your VAT, your T2 box on the VAT return, you can put in the deduction for the VAT. The important thing to remember on VAT, proper documentation is required. The invoice should be in the proper name. And don't forget to include a credit note if you get it. So if you pay for something and there's a reduction in price or you get back some money afterwards, you'll get a credit note. Make sure to include it. And remember, by submitting the VAT-3 in your tax returns on time, you minimize revenue interaction with your business because revenue regards you as a lower risk individual by being on time on everything. So looking at structures, majority in this sector trading through a limited company. Some trade through their own name as sole traders. But one must remember, tax is individual, and is what's right for you may not be right for your neighbour. So examine your structure to ensure tax efficiency and to keep tax to a minimum on everything. So if we look then, at the energy sector and what's happening in it. So qualifying equipment in this sector, the main types of qualifying equipment will be wind turbines, photovoltaic equipment, ancillary equipment for storage or grid connection, other products as listed. And even though other products and that may qualify, you wouldn't regard them as plant for tax purposes. But if they're on the SEAI EEE project register, they will qualify for the accelerated allowances that we'll be talking about in a moment. So the summary of the equipment and that can qualify are motor and drives, which leads to energy efficiency, lighting, again, energy efficiency, building energy management systems, again, everything has got to do with improving energy efficiency. ICT, upgrading computer systems, heating and electrical provision, which are some of the single biggest spend items there, solar and photovoltaic equipment, electric vehicles and alternative fuel vehicles, cooling equipment, and electromechanical systems. They're the list of the products that can get these accelerated allowances that we have. And if anyone goes on to the SAI website, it's an absolutely super website of information and detail, on all these with a lot of different information of what's available and that, so really worthwhile taking time looking at the SAI website. So if we look at, how it works from a tax point of view, depreciation is not allowed in the accounting sense for income or corporation tax. You will see if you look at the business accounts, there's a figure there for depreciation. There's no tax deduction for depreciation. Instead of a tax deduction, you get what's known as a capital allowance. So you don't get depreciation, but you get a capital allowance, which is equivalent of depreciation. For this allowance, it must qualify as machinery and plant. The item must be owned. So where it's leased or hired, the accelerated capital allowance is not available, because where it's leased or hired, the individual or the company don't own it. But where it's leased or hired, you can get an ordinary deduction for those allowed as a deduction in trading of your business. On the standard way, it's 12.5% over 8 years. So the 100% allowance for it is written off over 8 years. So if you have spent 24,000 net of VAT, the allowance is 3,000 per annum for 8 years, 24,000 over the 8 years if you don't qualify for accelerated capital allowances. So if you look at it, the low rate taxpayer saves €855 per annum. It's a net cost to him or her of 17,160. The high rate taxpayer, 1,560 per annum. So the net cost is 11,500. In a limited company, the allowance works out at €375 per annum, but the net cost is 21,000. So as you can see, the net cost in the company is significantly lower than as an individual. But you must remember the benefit of the company is you're only paying 12.5% tax on your income. So the big ticket item in the sector and is accelerated allowances. And what accelerated allowances for? There are only 2 sectors of accelerated allowances available at the moment. And the amount of the expenditure, so the amount you spend, is written off in 1 year. So it's 100% allowance in the year that you spend the money. The benefit is immediate. So it's treated the same as an expense. It was introduced in 2008 for companies, and in 2017, it was extended to sole traders. And it runs to 2023, the end of 2023. And it must be on the list, as I was saying earlier, the summary list, to get the full tax allowance. If it's not on that list, it's written off over 8 years. If it's on the list, whether you get a grant or not, you can get an allowance in 1 year for it. It must be incurred for the purposes of the business. It must be owned by the company or the individual. As I stated there, if it's leased or hired, you can't get this allowance. It must be in use at the end of the accounting period. So if you've paid a deposit coming up to the end of December, you can't get the allowance on it. You'd get the allowance the following year on it. It must be there and it must be in use. Even if you haven't paid for it by the end of the year, but it's in use at the end of your accounting year, you can get the tax allowance on it. And it must be wholly and exclusively for the business. So if there's personal use on it, that personal use will have to be taken out of it, and the allowance will only be for business use. If it ceases to be used in the business within 8 years, there is a potential of a clawback. But the way technology is going, it could cease to be used within it, and it's scrapped. It's not taken out and sold on, it's scrapped because of it. And if it was scrapped, there's the balance of the allowances can be claimed in the year it's scrapped. Something hugely important with the way technology is moving. In 5 years' time, you could see technology has surpassed where it is today, and suddenly there's a much more efficient system going in, and you might scrap where it is, you can write it off. As I'm saying, it must be on the Schedule 4A of the Taxes Act or the SAI list. There's a minimum spend, and the minimum spend is in and around €1,000 of a spend on the equipment, and anything above it. Once it meets that low threshold, it qualifies for the write-off, and in most cases, it will meet it. It's available to sole traders or companies. The allowance must be claimed on the annual tax return, and the equipment must be new. And in the claim, the CT1 is the company tax return, the corporation tax, or the Form 11 is for individuals for income tax. So that's where it must be claimed. So if we look at, a couple of scenarios here, low rate taxpayer costing €12,000, takes off the VAT, 1,427. In both cases, they're low rate and high rate. It's 10,573 is the net cost. The low rate gets tax relief of 3,013, so it's costing them 7,500. The high rate gets tax relief of 5,498, costing them 5,075. But look at the company. The net cost to the company stays the same because it's a standard 12.5% of 9,251. But if we look at the net cost of 10,573, if this being, this being a reasonably good year in most sectors, that can go in effectively like an expense. So instead of writing it off, if people have work to do before the end of the year, they're looking at reducing their tax liability for 2021. One should look at some of these expenditures because they're able to write it off immediately against tax. Really, really worthwhile investment. Look at it immediately. Electric vehicles, well, another one that was on the list there that can be written off. But the accelerated cost is based on the lower of cost and our 24,000. So if you buy a second-hand electric vehicle and it's 15,000, you can get the cost written off. If you buy a new one and it's 40,000, you can get 24,000 of it written off immediately. There's no BIK for a cost up to 50,000. There's grants available for individuals, very little grants available for company. There's some small VRT relief available on a sliding scale, then it loses as it goes above. It's either 40 or 50,000 on the VRT. So if you're buying an electric vehicle, examine whether you buy yourself or through the company, which is the best, way to fund it. But one must remember, if you fund it through a company, you can get 24,000 written off immediately. The tax strategy papers are out at the moment and they're recommending these stay. The electric vehicle regime stays till the end of 2022, not 23. And they're recommending that to be extended for another couple of years to encourage people to switch to electric vehicles. If you bought an electric van for your business, you can get the tax deduction straight away without any limit because it's a commercial vehicle. The other one that there's accelerated allowances for is for specialist safety equipment. There's a list of safety equipment on the revenue website, and it's at 50% a year over 2 years. The accelerated allowances on energy efficiency is written off over 1 year. This is over 2 years, and it's on the net of VAT expenditure. Examples are quick hitch mechanisms, chemical storage, hydraulic link arms, wheelchair restraints, wheelchair docking station, provision of access lift or hoist, to integrate a ramp to the farm vehicle. So there's loads of stuff for people who, are in wheelchairs or incapacitated to look at the safety equipment and get a write-off very, very quickly on it. So there's loads of little things, from a write-off point of view where you can get it at 100% or then over 2 years, on that safety equipment. And just a couple of other things I'm going to touch on that I call back to basics and just to remind people. If you're business and you need land, the landlord, if you are taking it on an annual basis, remind the landlord that if he's leasing it to you, he can get it tax-free. 5 to 7 years, they can get up to 18,000, 7 to 10, 22.5, 10 to 15, 30, and over 15, 40,000. So it's something to encourage the lessor to allow you to get it, to give you certainty with land. Also, are you paying family wages? Maximize what can be paid to children. It must be on a commercial basis. Children over 16 years of age can earn a commercial wage. It's slightly lower than the minimum wage, but they can. And again, it's a tax deduction in the business. Remember, a child or a single person can earn up to 35,000, just short of 35,000 at the low rate of tax. So hugely, beneficial there. That if you pay a child 34,500, you're effectively getting nearly a third of that as a tax deduction. And, you're saving, or they're paying, less than a third of it in tax. You're getting it as a tax deduction, saving you a good bit of tax. If you're paying a bonus to staff or family members, there's the 500 small awards allowance, a voucher, 500 voucher scheme that you can pay to staff, or if you're a company director, pay it, give it to yourself without any tax, PRSI or anything. It's stuff like that should be looked at, particularly this has been a good year. Look at it between now and the end of the year, what you can do to minimize your tax liability. Are you claiming business travel for your own car if you're trading through a company? If you're in a company, are you using the voucher system for yourself? Look at examining your structure and see and make sure you're paying the lowest amount of tax that you can. And remember, the big one is for 2021, the year we're in, that accelerated allowance of 100% and the one of 50% is there. And people should look at and concentrate on actually spending money on that sector and see what they can do on the farm. Particularly, if you look at in the energy, the spend can be quite significant on an annual basis on heating and electricity and that, where if you're able to generate some of your own heating, your electricity there from it, it will have 100% write-off initially, and it'll also save money in the business going forward. The ACA, as I call it, the Accelerated Capital Allowance, it's a dramatic impact as it's an upfront tax relief. It's 100% write-off in the year you spend the money. So as I keep saying, revisit your structure and get a tax review. And the tax system as it stood at the moment encourages this type of investment. It won't last forever, and it's to encourage people to jump in, and do it when it is. I know technology will improve, but you're getting an immediate tax hit for spending that money at the moment. So that's a summary of my presentation, and I'll hand back to Donal there now.
That's great. Thanks very much, Declan. Really interesting presentation, and I think in particular some of the quick hits there. Can I just ask a quick question? All those tax incentives, they're based around the annual tax scheme, or not schemes, but annual tax submissions. So there isn't an opening and closing date. It's just each year rolls on, and that's it.
Yeah, if we look at it, today is the final day, 23rd of September, for company tax returns for 31 December last year. So if you were submitting it today and you spent it last year, today is the day you claim it. Individual tax returns, personal tax returns are either 31st of October if you're a paper filer, or 17th of November if you're an online filer. So you file it. They're the important dates. You don't do it separate throughout the year. It's part of your tax return.
Mm-hmm. Okay, so somebody looking at 2021 as the financial kind of, let's say, a cash-rich year, they have until this time next year to
make the claim, but they must spend the money before the end of this year.
Okay, yeah. So they need to get the electric car in the yard before Christmas Eve or New Year's Eve.
Exactly.
Okay.
Yeah.
Okay. Very good. The budget is coming up. You mentioned corporate tax rate as well as a 12.5%. So it's one to watch. The budget. Do you see anything there that we need to watch or keep an eye out for?
Yeah, the budget is on the 12th of October, so it's just under 3 weeks away. I think it'll be rather silent on a lot of tax measures this year. Look, me working in the tax industry, there's a lot of kite flying out there at the moment, but that's softening us up, not for this year, for next year. Because, say, carbon tax, they flagged last year that there's going to be 10 euros a ton increase every year for the next, till 2030. So we already know that that's coming. And it was floated the other day as if it's a new tax. but we know that's coming. So I think there'll be a little bit of tinkering at the edges, nothing major. And the reason for that is there's a commission on taxation that are sitting at the moment, taxation and welfare, that will report next summer of 2022. And I think that's the danger year then.
Okay.
Yeah, because we have to pay for, unfortunately, just the pandemic for the last 2 years comes on top of our big national debt. So it'll have to be paid for some way.
Mm-hmm. Okay. That's, one to watch in the future, but we'll enjoy the party for now.
Very much so.
Declan, if I can ask one quick question, we've got about a few minutes left. The electric vehicles, you mentioned there's no BIK up to 50,000 euros.
Yeah.
Is there a deadline on that?
Yeah, it's 2022. It's 2022 at the moment. Now, I was just reading the tax strategy, and another interdepartmental group looked at it, and they're recommending that be extended for another 2 or 3 years to encourage people into electric vehicles. But I just saw on this morning's report that they're looking at that 50,000 to be weaned down every year, to be, on a sliding scale, like 50, 40, 30 over the next couple of years. So that's what I would say could happen.
Okay, we'll keep an eye on that. I suppose a lot of nurseries would use buggies on their nurseries, so for moving stock around. And I wonder, are electric vehicles covered in that, or is it just road vehicles? But we'll check the SEAI, EEE, or EEE register to see if they're included on that.
That's it, yeah.
We just have a question there, and we'll bring Donal and Ray back in. Is capital allowance for EVs only for fully EV, or does it apply for hybrids or plug-in hybrids?
Yeah, the hybrid and plug-in hybrid, you do get capital allowances, but they're written off over 8 years, 24,000 over 8 years. Where a fully electric vehicle, it's the 24,000 is written off in year 1.
Okay, that's it. That could be the clincher.
Yeah.
Okay. Well, look, Declan, thanks very much. I'll bring Donal and Ray back in, and then we'll see if there's any other questions.
Yeah, just actually, Declan, I have a quick question for you in relation to health and safety expenditure. So you mentioned you could get health and safety purchases wrote off. What if a farm was to buy something very specific that mightn't be, on the health and safety list, like you mentioned, like there was chemical stores and other things, but if there was something really farm specific, like these horticulture enterprises have really specialized equipment, if there was something, a health and safety purchase, would they be able to avail of that, or how would that work?
I'll just read a thing on it now, and this sums it up for you, Donal. It is intended that the Department of Agriculture, Food and Marine will issue a farm safety adaptation certificate for submission to revenue. So where it is, the good news on that is that you could make a case for it and qualify. So if someone was thinking of doing it, it probably would do it the other way. Make a case to the Department of Agriculture before you buy it, looking to ensure that it is. But they have given a commitment that they will issue this certificate, and for submission to revenue that you're entitled to it. So if you're able to convince them and you're able to get that certificate, it qualifies.
Okay, perfect. Great. Just before as well, before we log off, just a quick question that I actually just got text to me. In terms of, Ray, could you maybe explain the metering of the point of entry, I suppose, where the meter is located on farms, whether it be mushroom farm or strawberry farm or whatever?
Sure, Donal, and again, it's the principle of it. It's the heat that is used, which can be sometimes a little bit different from the heat that's generated. So what I mean by that is that the heat that's used for the mushrooms or for the strawberries or whatever. So the meter has to be as close as is practical to the use point rather than at the boiler. So if the boiler was across the yard, for example, it could be, there could be losses between the boiler house and the point of use. So in some cases, depending on how complex it is, that could lead to a number of meters. And we'd also want a meter actually if there was a backup system on oil to make sure that could be subtracted from any claim. So the meter in a simple installation could be 1 meter, but it's probably going to be a couple of meters, possibly at each grow house or whatever. But we'd work that out with you at the design stage, whether how many meters were actually needed.
Yeah, so it's basically on a case per case
and it's
basis,
the principle of at the point of use. Keep that in mind, the point of use. So you know, if the heat distribution is going to a particular heating house or heating tunnel, it's at the entrance to, or when the heat arrives there. That's the heat that that's what's called the eligible heat, the heat that's been used for the purpose that it's meant for.
Perfect. That's great. Okay, that's all from my side.
Okay, Donal, thanks very much. I'll wrap it up there. So I want to say a big thank you to everyone who joined us today online and who's watched in. In particular, I want to thank Declan McEvoy from IFAC and Ray Langton from SEAI for their presentations today, for answering the questions, and also the preparation time they've put in. It's much appreciated, and I know the growers appreciate it as well. So thank you very much. I want to say our next event as well is going to be on the 28th of October. It'll be recorded as well, and that's going to be in the area of solar PV and heat recovery. And we'll have speakers Pat Smith from Local Power and Peter McMahon from European Industrial Chillers joining us for that. So again, that'll be online. You can find details on Twitter at Teagasc HDD, or look at the Teagasc events webpage for details there. Donal, do you want to come in as well?
Yeah, no, it was the 28th of September, not October.
Oh, my apologies. Yeah, 28th of September. And then we have another Tuesday, one, 7th of October coming up as well, looking at plastics. So we'll just thank everyone for joining us today, and we'll leave it there. Thanks, Declan. Thanks, Ray. And thanks, Donal.
Thanks, Donal. All the best.
See you all. Take care. Bye-bye.
Bye.